Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we're going over the almighty Microsoft stock. I see here this little article. It's called How a Bunch of Giant Tech Companies Make Their Billions, and it's breaking down their revenue streams by percentage. And I wanted to focus today on Microsoft stock. They did just report earnings, which absolutely blew numbers out of the water. A lot of tech companies and just companies in general have been crushing earnings in this recession and doing a lot better than what a lot of people expected. So I wanted to go over my opinion with Microsoft stock and basically just what I think about it in general, and basically should you be buying the stock at these levels. If we go here to M1 Finance and then we type in Microsoft, you see the stock right here, and it has risen quite significantly. It is over $200 a share now, and before this recession hit, it was about $180, $185 a share, and now we are over $200, and it did just have that earnings beat, and it did drop a little bit because it was a little bit overpriced. So basically, my opinion is whether or not you should buy the stock based off the long term. Not worried about where the stock is going to be tomorrow or next week or next month, but will this stock continue to have this long uptrend? You see, 5 years ago, we have a 330.93% increase, and this was a $45 stock. $45. Today it's over 200. So that is an incredible stock growth in the last 5 years. So I hope that that will continue. And basically I'll give my opinion. So in this video, we'll be going over Microsoft CEO, my opinion with him and the company, and basically him as a person in general. We'll be going over Microsoft earnings, like I mentioned, in Q4. And then we'll also be breaking down by each category how each position growed and how each position slowed in this recession. So basically, my opinion with Microsoft is pretty positive. And if you're not familiar with me, basically my name is Jordan. I'm the Millennial Investor. I track my annual dividend income, my monthly dividend income, and my portfolio value, as well as my YouTube income and expenses as well. So if you're not familiar with me, go ahead and subscribe if you're interested and like the video. I do have 18 people that have signed up successfully through my referral link using M1 Finance, but it is in the description if you're interested, and you can get $10 just for signing up. Even if you don't like it, you can get $10 just for getting signed up. And even if you're not interested in M1 Finance, go ahead and sign up anyway, because there are some awesome things in that description other than just that referral link. So go ahead and check out everything that's down there below. But go ahead and get started. Microsoft CEO, Satya Nadella, when I'm pretty sure that's how you say his name. I always pronounce it wrong all the time. But Satya Nadella, he is an amazing CEO. He has completely turned this company around. So something I want to point out here about Microsoft stock, we're on Google. You see the big tech run up. You see the big tech bubble. And at one point, Microsoft stock was about a $3, $4 stock and went up all the way up to $60 a share. Now, it did not break that share price for about 17 years. It floated in the 20s, the 30s, basically floated around that range, and pretty much didn't go anywhere for about a decade and a half, until finally, when this guy became the CEO, he completely turned this company around. He just took it from a completely old, blue chip, boring company to a growth stock again. They have such a large economic moat, and this is an excellent visionary CEO, and I think he's doing great with the company. So overall, he's been the CEO since 2014. You can see when the stock price took over in 2014. So what was the exact date? February 4th, 2014. So yeah, he took over right about here when it was $40 a share, and you can see now it's about 5 times that market cap. So an excellent growth story for Microsoft, and I see that this potential will keep up if they have this guy as CEO. So now we get past that, let's go ahead and look at the earnings report, and let's see how they did. So if we look here, earnings per share, and those of you that don't know, earnings per share, that's basically the profit per share. So for every public stock that is in the market for Microsoft, which is $200 a share, they basically made $1.46 per share of profit. For every share out there, they made $1.46 of profit. And only $1.34 was expected. So they beat earnings. And then their revenue came in at $38 billion versus a $36.5 billion expected. So about a $1.5 billion beat. Absolutely incredible. And then this chart is what I mainly wanted to focus on. This is why I wanted to talk about the earnings here. I wanted to show all of the growth for nearly every single category that Microsoft has, even in the worst of recessions. Now remember, this is when the shutdowns are happening. This is when the worst case scenario is possibly happening for Microsoft, and I think that this is incredible that they were able to grow nearly every single segment of their business in a recession, in a horrible recession. So let's go ahead and look how this went down. And with these numbers, with all these, I wanted to focus on all the numbers before 2020 as well as how they handle this recession. You see a lot of green on this chart and not a whole lot of red. So first of all, when we look at Azure, we look at the first category. This is the one that a lot of people like to focus on. It has grown significantly, almost in the triple digits just 3 years ago. And I think it is incredible the amount of growth that Azure has had. So you see in recent years, about 2019, 2020, it had about 60, 70% revenue growth. So even in the recession, it was still able to maintain 47% revenue growth. 47%, almost a 50% growth year over year. So that is absolutely incredible, and the fact that they're able to maintain that through a recession is awesome. Dynamics, products, and cloud services. So you see it usually floats around 10-ish percent, 10, 12%. It basically kept right in line of where it was this year compared to previous years. It is 13%. And then now we look at enterprise services. We had one little red quarter, but other than that, it usually floats in the single digits of growth. And the fact that they didn't even slow growth, that they just kept it at even, is still impressive. Next, we go to Office 365. Commercial usually floats in the 40s, 30s, 20s. They were still able to grow it at 19%. Excellent. Office commercial products and cloud services usually floats around double digits. They're still able to grow at 5%. Office consumer clouds and services, 6%. Search ads. The search ads was the only category that they had a big drop off on, and that is completely understandable because the amount of money that people spend on ads in all categories drops through the floor. They went down 18%, and usually that is a growing category, but this is the one negative quarter that they've had, and that's completely understandable. But anyways, you see the pattern here. Server clouds and services, 19%, Windows commercial, 9%, Windows OEM, 7%, and then Xbox grew a whopping 65%. So you can see here on that list, and then 65% growth is off the chart. So overall, Microsoft did very good for this quarter, as they always do. And I want to compare Microsoft's revenue breakdown to compared to a lot of other tech giants out there. So we compare it to Apple starting off. So Apple is the one that a lot of people look to when they think of Microsoft. When people think of the biggest stocks in the world, you see here where you go to M1 Finance, we sort by stocks, and we sort by market cap. A lot of these names are a lot of the same tech names you see people talk about all the time, primarily these 4 or 5. The 5 that are in this list right here, you see Apple and Microsoft. Those are the 2 leaders that everyone likes to focus on. Then next you have Amazon, Google, and Facebook. Primarily those 5 are the 5 that everybody likes to talk about. So with Apple, we can go ahead and look at their revenue breakdown. They have 62.8% of the revenue strictly coming from the iPhone. And then after that, they have 14% in services, like their Apple credit card and stuff like that. And you can see their revenue by region, 42% in the Americas, and then the rest in other categories. And then they have 9.6% in Mac, 7.1% in iPad, and then 6.6% in miscellaneous other products like AirPods and stuff like that. But you can see the Goliath share of the Apple revenue primarily comes from the iPhone at almost 2/3 of the revenue. Okay, let's go ahead and look at Amazon. About 52% of their revenue strictly comes from their online stores, 18% from third-party seller services, Amazon Web Services, which is a high-growing category, kind of like Microsoft Azure at 11%, 7% physical stores, 6% on Amazon Prime, and then 4% other. And you can see the revenue breakdown by region there. Then we have Google, and you can see Google is a lot like Facebook's chart. It is basically all one category. It is split up between different services, but basically it's all through advertising through Google properties. You see Google Play Store, you see Gmail, Google Maps, whatever. 70.4%, over 2/3 of the revenue strictly come from those, 14.6% coming from Google Ads, and then 14% coming from other. Next up, we have Microsoft. Microsoft is the one that we are going to focus on. It has 25.7% in Office products, 23% in Microsoft Azure, 17% in Windows, 9% in gaming, 6% in ads, 5% in enterprise services, 4% in devices, 4.8% in LinkedIn, and then 2.5% in other. Now, first of all, before we keep going, and there's only one left to go through Facebook, you can see the diversity between this versus a lot of its other tech giants. Probably the closest to Microsoft is probably Amazon, but you can see then the Goliath share. Over half of the revenue primarily comes from their online stores. Okay, that's fine. And then last but not least, we have Facebook. 98.5% coming strictly from Facebook ads. So basically their entire revenue stream is basically one service and one product, and then 1.5% whatever else. So you can see with Microsoft, it is a lot more diverse than a lot of other tech companies. Now, one thing I want to point out here, I want to break down each category. Now you can see here that about a fourth of their revenue is their largest revenue share, and that comes from Microsoft Office. So to break down, if you don't know any of these categories, what they do, just to give you a better understanding of what Microsoft does. So Microsoft Office products is basically your Microsoft Word, your Microsoft PowerPoint, Microsoft Excel, stuff like that. All your Office products that a lot of students, a lot of individuals, especially a lot of businesses are required to have their business function. So that makes up a fourth of their revenue. Next, we have Microsoft Azure. Now, this is by far, as you can see, their highest growing category in their revenue stream, even growing now at 47% in this recession. Absolutely incredible. And so with that, we have 23% of their revenue stream. It will very soon probably be their largest revenue stream, outpassing that of Microsoft Office. But that is basically any and everything involving from cloud, involving storing pictures and videos and saving passwords and logins and the security information. All things that involve the cloud. Microsoft Azure is the thing that is thriving right now. And one of the biggest reasons is because their CEO has forced that issue. And then next we have 17.7% coming from Windows, Microsoft Windows. I'm sure everybody knows what that is. 9.4% coming from gaming. Now that's from a couple different things. They do have their own streaming platform that is competing with Twitch, but they do have Xbox, and that is the large part of their gaming revenue. And then next up they have their own search engine. Now I know Google definitely outperforms any other search engine out there, and it is by far my favorite like a lot of others, but they do own Bing, and they do still have a growing revenue stream from that. And like you can see on this little subtext here, it is a profitable category, so that is still $7 billion worth of revenue, and that is still a growing category, just like pretty much everyone on here. As you see, that was the only one that was in the red was our search ads, but before this recession, you could see it was still growing in double digits pretty much every single quarter, so that is incredible. Enterprise services is at 5.3%. Devices is basically just basic devices like tablets and computers and whatever. 4.8% in LinkedIn. Now, I think this is really interesting because I think this will also be a long-term growth story. I think there's still a lot of smaller businesses, a lot of smaller companies that still apply for jobs and still hire people in paper and in person. You know, as we get further and further along, I think it's going to become more and more at home and a lot of other services that they've used to diversify their income with LinkedIn. So I think that's going to be a growing category in the future. And then they have 2.5%, only 2.8 billion only in other categories. So you can see their total revenue total is up to 110.4 billion, and 16.6 of that is strictly in net income. 51% of the revenue strictly comes from the US, and then 49% in the rest of the world. But overall, you can see how this business is completely diversified between so many different categories, and like Apple, they are constantly buying out tons of different other businesses, taking stakes in businesses, buying other companies outright to try to grow those businesses to grow their overall platform even more. So overall, guys, what is my opinion on Microsoft, and should you buy it? And what does their valuation look at? So if you go here to Microsoft, their PE ratio is about a 34, and their forward PE ratio is about a 32 or 33. So with Microsoft, I think that at these valuations, it's a tiny bit rich. That said, there's not a bad price to buy Microsoft at. Now, here's the good part. If you're a dividend investor like me, all the stocks that I own in my list, all 31 stocks here, are all dividend stocks. I'll scroll through them here so you can see them if you're not familiar with that. But basically, with Microsoft, it is an excellent company to own, whether you're a dividend investor, a dividend growth investor, a growth investor, anything. It doesn't matter. Microsoft is pretty much an excellent company to own, and it doesn't matter if you're going to buy the stock at $200 a share or if you're going to be buying it at $100 a share. If you go here to my activity, I did just buy some more of Microsoft literally yesterday, and I plan to buy some more, just some small pieces. I'm just slowly adding on to my position, growing those dividends and growing my ownership in the company because I'm a believer in the company. I think in the long run, Microsoft will be profitable and will be amazing in the long run. So with Microsoft, I think you're buying a little bit rich at this valuation. I think a 30 plus PE ratio is a little bit high for anything. That said, the fact that they're willing to grow their overall company in the double digits in a recession at 13%, these companies are becoming more and more defensive. You have a visionary CEO, you have a diversified revenue stream, you have an incredible amount of profits, a double-digit growing company, even though it's the largest company in the world, runner up next to Apple. I think that this is an incredible stock to own at pretty much any level. You can see this growing dividend from 31 cents, goes up to 36, to 39, to 42, to 46, to 51. There's really not a bad place to buy Microsoft. So if you're wanting to buy this stock, if you're looking at this now and you're a new investor, If you want to wait for a better price, you could probably wait and buy a better price. But like I always said, the same thing like I always say, like when I mentioned Tesla stock. Buying Tesla stock, if you're a believer in the company, if you're a believer in their electric vehicles, it doesn't matter if you buy the stock at $1,400 a share or if you buy it at $500 a share. If you're a believer in the company, eventually their valuation will grow, their company will grow, and people will buy their stock. But basically with Microsoft, in the future, if you're wanting to pick this up at a better price, Microsoft is going to be a good buy no matter where you're buying it. The same thing with Tesla, like I give my examples with that. Microsoft is an excellent company. If you buy it at 200, I'm sure one day in the future it will eventually break 200. That might take a week, that might take 2 years, but this will break $200 a share, and regardless, you're going to have an excellent growing dividend every single year that you hold it. So overall, guys, my opinion with Microsoft, so many people love that company and for good reason, and I think you should buy it at pretty much any prices. So thank you guys so much for watching. You made it all the way to the end. I'll give a quick update on my portfolio. We will update this annual dividend income and my monthly dividend income at the end of the month, as well as my YouTube ad revenue. I did just get monetized for ads. Those of you that are not keeping up with me, I did just hit 1,000 subscribers, and I'm now over 1,100, so thank you guys so much that got me to that point. So if you see my positions here, my number one position is now Whirlpool. We had a huge earnings beat the other day. You can see that jump up there. You can see the stock, it went up nearly 10% the other day, that massive run up, and Whirlpool is killing it, and it's in the green today as well. So we are nearly at a double up through Whirlpool, and my other best performing stocks are Discover Financial, NextEra Energy Partners, and Apple. And then my worst performers, we have 3 different stocks in the red. We have Starbucks, WP Carey, and Store Capital, my real estate companies, and I bought more of these 2 just yesterday. But overall, guys, we'll begin funding this portfolio even more, and in total, throughout the entire portfolio, on a time-weighted return, we are up 15.01%, $382.45 coming from unrealized gains. And then in total, for a money-weighted return, we are up 21.66%, $428.93. In market gain, $402.48, and $26.45 coming from earned dividends. And overall, guys, we are doing excellent in the portfolio. And like I mentioned, if you have not signed up yet through this referral link, it is in the description of all of my videos. You can get $10 just for signing up. And this referral link is in the description of all my videos, as well as a lot of other things as well. So if you're interested in that, go ahead and check that out. And thank you guys so much for watching, and I'll see you next time.